Hello, everyone. Today, I'd like to dive deep into two extremely important developments surrounding the cryptocurrency market in early December 2025: the shift in macroeconomic policy and the expanding participation of institutional investors. Let's start with the U.S. Federal Reserve, or the Fed. On December 1, 2025, the Fed officially ended its quantitative tightening policy, which had been in place for 3.5 years. This decision was originally announced at the Federal Open Market Committee meeting held on October 28-29. First, what exactly is QT? QT is a monetary tightening tool where, instead of reinvesting the proceeds from maturing U.S. Treasuries and mortgage-backed securities held on the Fed's balance sheet, the central bank allows those assets to roll off, thereby shrinking its balance sheet and absorbing liquidity from the market. The Fed launched QT in June 2022 to normalize its balance sheet, which had ballooned during the COVID response, and to combat high inflation. Over roughly 3.5 years, the balance sheet contracted by approximately $2.4 trillion, about 360 trillion yen, bringing total assets down to around $6.6 trillion, about 990 trillion yen. The primary reasons for ending QT this time include bank reserves moving from ample to adequate levels, early signs of liquidity strain appearing in short-term funding markets. To maintain financial market stability, the Fed decided to halt further balance sheet reduction. How will the end of QT affect the cryptocurrency market, including Bitcoin? Many in the market believe that stopping the balance sheet's shrinkage will ease downward pressure on liquidity, potentially improving the investment environment for risk assets. However, there are caveats. Experts point out that the Fed's balance sheet won't start expanding immediately after QT ends, and it may take several months for the effects to fully materialize in the market. Uncertainty remains, particularly regarding inflation trends. Looking at historical precedent, when the Fed ended its previous round of QT in August 2019, Bitcoin initially dropped about 35% in the short term, but once the Fed resumed liquidity provision, Bitcoin recovered and eventually entered a bullish phase. Market analysis also suggests that during periods without QT, i.e. when monetary conditions are relatively accommodative, altcoins tend to outperform Bitcoin. This is because Bitcoin dominance typically falls during easing cycles as capital flows into altcoins. The second major news comes from Vanguard Group, one of the world's largest asset managers. On December 2, 2025, Vanguard announced that it will allow trading of crypto ETFs on its platform, a dramatic reversal of its previous stance. This policy change affects more than 50 million Vanguard brokerage accounts managing roughly $11 trillion in assets. Clients will now be able to access spot Bitcoin ETFs and Ethereum ETFs issued by providers such as BlackRock, Fidelity, and Grayscale. Funds holding Bitcoin, Ethereum, XRP, and Solana will be permitted, but meme coin-based products remain excluded. Vanguard also made clear that leveraged, inverse, and futures-based crypto products will continue to be blocked. Why did Vanguard reverse course? The main driver is growing demand from institutional and retail clients who want digital asset exposure through traditional investment vehicles. Leadership change also played a role. The previous CEO, Tim Buckley, famously declared in 2018 that clients would never see Bitcoin products at Vanguard, arguing that cryptocurrencies lack intrinsic value, generate no cash flow, and are unsuitable for long-term retirement investing. However, after Salim Ramji, a former BlackRock executive and blockchain advocate, became CEO in 2024, this major policy shift occurred. This move can also be seen as a response to overwhelming market terms. Spot Bitcoin ETFs, launched in January 2024, attracted roughly $25 billion in their first month alone. With competitors like Fidelity, Charles Schwab, and Robinhood already offering crypto ETFs, Vanguard was the last major U.S. brokerage to open the door. The Fed's termination of QT signals improving macro liquidity conditions, while Vanguard, one of the biggest traditional finance players, opening crypto ETF access to its 50 million clients, clearly demonstrates the maturation and structural evolution of the cryptocurrency market. The combination of potential liquidity recovery and a historically skeptical giant finally bowing to client demand shows that digital assets are transitioning from pure speculation to being recognized as a legitimate, non-core asset class. Vanguard now treats them similarly to gold. As of early December 2025, Bitcoin is trading below $90,000, roughly 20% down from its late 2024 peak near $108,000. Yet these structural developments significantly raise the likelihood of sustained medium to long-term capital inflows. We will need to closely watch how these events play out over the coming months, alongside inflation trends. That concludes today's analysis. Thank you for watching.